Hey there, folks. Welcome to the Market Internal Review for September 13th, 2023. So, starting out the day with trend balance and also no tick. We didn't have a actual 500 break on tick until 10:04. Looking at the open, we had a massive engulf, but it really didn't do much other than take us to mid of yesterday's range from Tuesday here, which was about 447 on the nose. We continue to consolidate, no tick. Add and Vold were over zero for a little bit, and they flipped it. It was around 450 on the buy side, and as we started to reject previous day's mid range multiple times, we slowly flipped that to 450 sell side on the decline for the New York Stock Exchange. They sent us all the way down to previous day's low price. Of course, they like to take it right below in order to clear out any stops, anybody that longed below a day towards the end of yesterday. That's at least how I read it, effectively stopping them out. TiWAP levels. So TiWAP price for yesterday ended at 446, which was real close to the mid of the range. And we effectively held that as support once we tested the previous day low range. So roughly at 10:45, we basically held that most of the afternoon session. So from 10:45 all the way until not quite 3 p.m., we had this engulf. Finally lost TWAP and lost the daily gap and came all the way back down to previous day low. And I mean, very humorous to me. We ended right at yesterday's TWAP price. A little bit fuzzy delivered, but the first standard deviation high from Tuesday acted as resistance the entire day. We had many wicks right on it to the cent, or plus minus 5 cents. We had one tiny little close right above it at a little past 130. 130 provided zero movement. None of the typical times that I like to use. It provided nothing. And we held trend balance most of the day. You can see it on the market internal RSI, where we're constantly oscillating red to green, red, green, red, slight green here. You can see it on the trend for add, the New York price movement. We're trending up and then down and up and down again and back up again. Just insane. Perfect balanced day. We stayed 100% of the day within yesterday's range. So very nasty for anybody trying to do directional trading. This is a perfect example of that kind of day. And even TWAP, once we actually started to see some kind of tick action today, it mainly remained flat for the whole day. So VIX back down to 13 after we had another spike of almost 15. Here's that add showing you that accumulation to downside. So very, very nice to see the accumulation was an early signal here at 126, also at 1118. If we go look at SPY at 1118, so 1118 was a little bit of a weak signal. We bounced right back up, but that 126, that was a pretty early signal for us, potential downside again, and of course that time it delivered. So that's an interesting measure I'm going to keep an eye on. But we did end at around negative 560 in decline. Tick accumulation was pretty interesting. I watched this most of the day off and on, and how we were accumulating upside, and then that dump from about, tick shows it about 140 is when it shows up on here, and then we flip it right towards the end of the day. Volume, we did make it to the bear zone for volume. I'm sure after hours probably printed a couple more. Oh yeah. So with this being said, being that we have a bear volume print, but price did not follow suit, that could be that could be a potential for an upside gap up type day tomorrow. So that could be very interesting. We'll just have to stay tuned. I'm really We've had a couple days, well, a couple weeks now that are inside weeks. Everything's quite restrictive, very tight ranges on futures, and just the same kind of range we're stuck in. So things are squeezing, they're contracting quite a lot. So we just got to wait and see which direction the market is going to go. So from a monthly TiWAP standpoint, looking at the composite index, we did have that previous low day break towards the end of the day. We did retrace back into previous range, but we did lose a monthly TiWAP. It's starting to curl down, but it's mainly flat. I wouldn't really say there's a whole lot to glean from this. Interesting to see though that the first standard deviation range is actually tightening. So we had that drop, and at one point the first standard deviation was about $1.90, and I mean just from the end of today, $1.70. So we're tightening. You can see it even in the monthly TWAP ranges, and go look at SPY. Sorry, I got some notes in here from earlier today. So as far as monthly TWAP, very choppy delivery. I'm used to seeing a lot more cleanliness around these monthly TWAP lines, kind of like this price action here and this bounce down here. And today was real fuzzy. I mean, monthly TWAP itself, I've seen that wicked right to the cent like we had this morning, but it became real hairy around midday. But for all intents and purposes, it does basically look like we're trapped between monthly average TWAP price and session TWAP, and kind of same story here though. It's like you can see just how wide that first standard deviation range was on the month back here, like as of September 8th, last Friday, and it's just continuously tightening now. So it's a lot like a Bollinger Band where you'll see the bands contract and expand during squeezes. This is the same thing. TWAP can do the same thing because it reads price differently than say like a VWAP would, as far as the calculation underneath how it averages it. It adjusts what it uses for the underlying data depending on the price's movement. When tick is breaking the configured level. This was another day too where, I mean, we had a squeeze here yesterday, but we didn't really have any. We had one RSI. Well, no, I guess we had two RSI breaks yesterday. Today we had one, but no squeeze. Certainly, I think was kind of a squeeze move. It's pretty low divergence, but this is a very specific calculation, so it did not alert that one. You can see the sell side from 12:30 on, just pretty much downside, and Qs pretty much the same as SPY. More upside though on per accumulation, and I guess they did have one squeeze, but Dow continues. We have filled half the monthly gap. That was big yesterday, and then today I noticed every time we kind of got into this monthly gap, it just could not hold and kept rejecting. So they had the same end of day break that the New York Composite did, which I think is a little bit telling. Now, Russell, I think I mentioned, I don't remember which video now, recorded too many of these, but that Russ is going to be the one that's going to drag us down. If they can't maintain any kind of strength, the rest of the indices aren't going to be able to, they're not going to be able to do it. It's 2,000 stocks. And I think from an economic standpoint, there's probably a handful of the market that is observing the Russell, and sadly, from a higher time frame standpoint, like on the daily chart, the Russell is looking quite weak. It looks like it could break down at any second to some newer lows than we've seen in quite some time. So that could be bad. I know we had CPI today. I believe we have PPI tomorrow. So maybe that could send the Russell into a different direction. I don't know, but we're now outside of first standard deviation on the sell side. We're into the second, so that's not great to see. If you're somebody that's holding on to positions, this is no bueno. Dow still remains roughly right around monthly TiWAP. It bounced perfectly this morning off of it. It did break it and it closed right underneath of it at the end of the day, but still, healthy, I think, within that first deviation. Qs, just to go back to it, much the same as SPY, basically right within that range, plus minus, so many percentages. They had a nice test of this monthly TWAP level up here today, and that's where we rejected and came back below. SPY, however, some monthly TWAP levels we bounced on, but nothing really up here that I could see that they had a hard rejection of. Just very fuzzy delivery, probably being pulled around by the other indexes, I guess. But yeah, no real data to support or have as an anchorage as to why this right here was such a strong resistance, other than Tuesday's session TWAP, that first high deviation there. So from a daily perspective on SPY, if I'm looking at this, we're still under the 10-day SMA. We're under the 50. We could not reclaim that again. We tried so hard today. You can look at these candles and these huge wicks. I mean, even this one that did close above, sadly, we had all this fighting here, more fighting, and now we're right back at 50% of this candle. I hate that I still got this level because it is 50%. I don't know why the market loves 50%, but the level's maybe not 100% accurate, but it's real close. It's at 446. That's so key to hold that if we're going to see any upside. And then 447, that was effectively the daily 50 SMA, and that is it's a very accurate indicator, as well as that 10-day. You can see this previous dump we had. Look how many times we rejected that 10-day SMA, the daily SMA. Such a great indicator there. If we can't close back over the 50 by the end of this week, I mean, it could happen tomorrow. I don't know, but we may start testing 20, test this weekly trend. I mean, I hope we hold that. If we are coming down more, that would really suck. Interesting so I changed this here. This is just tracking 5-day change for all the different sectors, and XLY is coming up here. Now the RSI, it is showing that it's coming up. The change, it's showing that it's coming up, so it's kind of interesting to see that. I thought it was an interesting measure. And as far as volume goes for the sectors, so XLE, first time we've really seen that cool off. It's been high on volume, and today it was only 18 million, quote unquote, only. The finance is still pretty hot, 31, and I guess the next one would still be utilities. We've seen some higher volume in that, and that's still pretty high at 15 from what we've been seeing. And we are seeing the tech sector starting to kind of come up, which again, that comes back to monthly TWAP, where I said we can see this accumulation. It's a little sneaky, but when you've got this tool here, which I know I still need to publish, people keep asking me about this. It's nothing fancy, but it is nice how it presents the data. But you can see, right, we're actually, I think we closed higher today on the Qs. Yeah, $1.30. So that's showing up here in XLK, which is the tech spider. So I'm just going to be watching 446 on SPY. It's going to be really important, I think, to break above the 50, which is just $1 away from this big candles range here. But until we're back out of 449, like I don't think we're out of the woods. We gotta really start making some momentum towards the upside. But even then, if we do, I still see that 451, 453. Those could still slap us right back down. So, all right. I guess I'll check real quick here on the macros. So, top 100 stocks above 5-day. See how we flattened out now. That's going to be something to watch. And then growth. I wanted to say 500. Yeah, they're starting to trend down. So from last Friday, or sorry, not last Friday. So last Friday we were at 44. We're basically right back there. So the growth's just not able to bring any kind of sustained trajectory. Starting to curl down on the 50-day, the 200, 20. So this was not a great day for just a macro standpoint of the S&P 500 and kind of what we're doing directionally speaking. All right, that pretty much wraps it up, folks. Not much else to say. Just a nasty range-bound day. Hopefully, if you tried to trade this, you were doing okay. The MIT indicator, I think, did a pretty damn good job of showing you that the market is in a choppy, balanced mess. That's what these little yellow dots. I love these flipping dots. They save my bacon. So, anyways, appreciate you watching. I hope you're still enjoying the content. And as always, happy trading.